All right, in this lesson, we're going to be talking about the current portion of long-term debt. This is kind of a calculation problem. It's not necessarily a journal entry, but we're going to learn how we can look at our long-term debt and maybe segregate them on our balance sheet based on how much is going to be due within 1 year of the operating cycle and how much is not going to be due in 1 year or the operating cycle. So that's what we're going to be looking at in this lesson. So let's get started here with understanding the current portion of long-term debt. Now, generally speaking, debt is pretty easy to classify when the debt has a maturity date. However, this is only true when the debt is a lump sum. So if it's due at maturity date, we basically say, okay, when's the maturity date? Is it long-term or short-term? And then that's the section that we would put it on the balance sheet. However, the issue becomes, what about if it's not a lump sum and instead it is an annuity type of debt? So when the principal payment is due in installments like an annuity, how do we treat that on our balance sheet? Since some of it's going to be due within 1 year and others of it is going to be due in longer than 1 year. So that's what we're going to be looking at here in this timeline. So assume on January 1, 20x1, a company takes out a $30,000 5-year note. The note requires payment of the principal and interest each year beginning on December 31st, 20x1. On January 1, 20x2, what is the balance sheet presentation for the note? So on January 1, 20x1, we take out this note and it's $30,000. It is due over a 5-year period. So $6,000 a year is going to be due, okay? So it also says that the note requires payment of the principals and interest each year beginning on December 31st, 20x1. So let me kind of show you what that would look like on this timeline. So here would be January 1, 20x1, right? And then here would be December 31, 20x1, and then December 31, 20x2, and then so on and so on and so on. And so what the question is on January 1, 20x2, which would be right here, what is the balance sheet presentation for the note? So first of all, what do we notice here? Well, if we're on January 1, 20x2, this payment would have already been made. So that is good, which means at that point in time, we owe $24,000. So 6, 12, 18, $24,000. Now, when it comes to current portion of long-term debt, we need to figure out how much is due on this $24,000 within 1 year or the operating cycle, whichever comes first. So within 1 year would be this $6,000. So the current portion of long-term debt is $6,000. Now, how much of it is long-term? So that would be everything else. So this 6,000, this 6,000, and this 6,000 are all due outside of the current portion or the 1 year. So in that case, we'll add those three together and we get $18,000. So total due as of January 1, 20x2 is $24,000. We're going to take $6,000 and put it in our current liability section of our balance sheet, and we're going to take $18,000 and put it in our long-term section of the balance sheet. Why? Because $18,000 is due outside of 1 year and $6,000 is due within 1 year. And remember, the key reason why we need to separate this out is, what are we most concerned with now? We're most concerned with what's due within 1 year. Well, $6,000 is due within 1 year. Therefore, that's what we want to put in the current section so that our managers and management can focus on making sure that we have cash to pay those liabilities, because they have a little bit of time before this liability becomes due. So that's what we're talking about when we talk about current portion of long-term debt. What's due within 1 year? We're going to take that out, put it on a separate line. It would be current portion of long-term debt or current portion of notes payable or something to that effect. That would be on the current liabilities. And then after that, in the long-term liabilities, we would just see long-term debt or notes payable of $18,000. So That's what we do with the current portion of long-term debt. So hope you enjoyed this lesson, and we'll see you in the next video. Hey guys, if you like this video, make sure you press the like button below. And if you're looking for worksheets that go along with all of these lessons, head over to my website at patrickleemsa.com or clicking the link in the far right. And I've got your next lesson right over here. So just click that link and it'll take you to that video. So until then, we'll see you in the next lesson.